Good morning, everybody. Welcome to Fed Day. Woo! Here we are at last. Been waiting a long time for it to pop up, and now we're here. Morning, Kate. Morning, Stell. Oh no, Stell's not here yet.
Good morning, Ryan. Good morning, everybody.
Are you doing all right?
Yeah, quiet market.
Yeah, fairly quiet. Nothing in the news today that I can see. That's it. Thanks for coming to the Flow Show. See you tomorrow.
Exactly.
Yes, lots to talk about. Oh, where do we start today? Let's start right in the middle. ECB's De Guindos came out saying FX is one of the most important variables to look out for, and they need to look at it carefully. We were joking about this a minute ago in the chat room. Has he put a bottom in the drop there, Kay?
I mean, if he has put a bottom in the euro, specifically him, the Guindos, then I think I stopped trading, and I don't know. I'm going to sell umbrellas in the desert somewhere. I don't.
Yeah, the man we call the bookend at ECB press conferences, because he just stands there. He's probably said 5 words in 3 years at his post there. But yes, he came out and with that comment, and it pretty much marked the low in the euro dollar there. Now, obviously, that's come about this drop in the euro because of Putin and everything he said. We were expecting this speech last night. It got delayed, put off until this morning. Obviously, he wanted to wait until markets were fully open in Europe rather than after the close yesterday. My 10 cents anyway. Anyway, he's announced a partial mobilization, and they're going to call up 300,000 reserves. He said he's going to support the decisions of the referendums. The military goals remain the same. They have lots of weapons to reply. This is a dig at the West mainly, and we'll use all resources to defend ourselves, he said. He said he's going to fight against the Western nuclear blackmail, as he put it. So these comments obviously risk negative, as pretty much was expected. I know a few of us took shorts in the chat room last night. I took a short at 99.90 before the presser was due last night, because I just felt as well as others in our room that there was nothing good going to come from his lips. So the risk reward was that we see risk trades down and the euro down, and thus has proved to be the case. So good pips made by all in the room there. Looking at some of the other news, the Bank of Japan was on a little bit of a buying spree. Only 1.26 trillion of fixed rate bonds they bought, a bit unscheduled as well on their other measures, Kay.
Yes, it's an addition to what the schedule said, but they've already said that in the past that they would do it to defend the YCC. It's a bit of a double-edged sword. Are they just keeping it capped at 0.25% because they want to just continue, or is it just until the upcoming meeting? In less than 24 hours, we'll have the Bank of Japan meeting, which is going to be pretty big for what's happening in the end. The duo, the Fed and Bank of Japan, have the power to move the yen around pretty strongly, I'd say. But yeah, I mean, as long as they do not decide or give the hint that they will widen the YCC band, or talk about leaving the zero or negative interest rate policy, they are somewhere trapped and have to come in at 0.25% to buying JGBs to cap the yield. And as a matter of fact, we had the second one in a row, 10-year auction failing. That's the first time in a very long time that it happened. So the pressure on the top end of the yield cap is really very, very high right now. So yeah, we'll have to really keep a close eye on to what the Bank of Japan says and may leave out of their statements. Could be a very big day there.
Yeah, but certainly their actions today don't give even a sniff of a potential change in tomorrow's announcement. So,
Absolutely. But that's yeah, that's well, I mean, looking at what Kuroda did over the past, what is it now, nearly 8 years, it is in line with what he does. But then we also have seen in 2016 at Davos that he can change all of a sudden without notice. So it's still going to be a big one coming up. The Bank of Japan, I think.
Yeah, as we were saying, it's looking for any subtle language changes rather than action itself. And speaking of Kuroda, Reuters, I wouldn't call it a survey, but they had a little ask around. And Amamiya is coming up tops for economists to replace Kuroda. Is it March, April next year? He's off.
The end of the fiscal year. The end of the fiscal year is March. So April we will get a new Bank of Japan governor. Yeah.
So a few months ago yet, but probably towards the end of the year, especially into the new year, we'll start getting a few names and runners coming up. People who expect to take over, and obviously we'll be guessing and second guessing whether they're dovish, hawkish, or whatever. The RBA booked some losses, some accounting losses overnight on their QE, on their balance sheet. They've for 21-22 year, they've got an accounting loss of 36.7 billion Aussie dollars, a valuation loss of 44.9 billion dollars, but they did have underlying profits, if you like, of 8.2 billion, but their bond holdings as a whole have gone into negative equity of 12 billion. So everything they've done in QE, they're basically down on effectively with going into net equity, but that's okay for them because they're a central bank, and RBA's Bullock said they can print money to meet their obligations, and the RBA is not insolvent. Isn't it nice to be a central bank, folks? If you've got a debt, you don't need to worry about income. You just print your own money and pay it off. I wish we all lived in that la-la land. But anyway, that's the RBA, and maybe that's going to be a bit reflective. And definitely one of the questions that's going to start to be asked of the Fed and their balance sheet, with rates rising so much and so fast, it's obviously going to put a pressure on their debt obligations. Also their book values on all their MBS that they're holding and everything else, but also the interest levels they're going to be paying banks. And I saw, I can't remember who posted it in our chat room, a tweet or somewhere, that they're going to be paying between 300 and 600 million, I think it's a month, on interest, depending on how high rates rise, because obviously banks that lodge money at the Fed get paid interest on that. So money that these central banks are going to be paying out on balance sheets, and book values on these balance sheets are going to potentially become a big factor as rates rise, which is probably one of the big reasons why they want to shift all this stuff off their balance sheets, QT and the likes. But the RBA is showing that they're in the hole there. Not that it matters, because they've got a magic money tree at the bottom of the garden, and they can pay one back, no problem at all. Over to China, the PBOC came out and said current rates are reasonable, but they provide room for future policy action. And then from that, we had the China Securities Journal coming out and saying that they're set to cut the LPR rates further to boost the economy. These were the rates they actually left unchanged on Monday. They also locked down another city, Tangshan, if I'm announcing that correctly, which is a big steel area, coastal area. So that went into lockdown because of COVID restrictions. So not looking good over there. And in fact, dollar yuan made a new high, was actually sitting not far off the highs. So another shift up there. Maybe due to the PBOC's comments there, but also this risk mood isn't doing much for trades around there as well. but one weakness continuing there, and we could be on for a fairly significant move now. We're above 7, could be looking up there, back towards the big let's call it 7.20 there. Big areas way up there. Keep an eye on that there. Any comments or news you've got, K-Man?
Regarding China?
Anything you like, mate? Take your pick.
No, okay. Regarding China, I'd say the PBOC is gradually raising their fixing rate. They are, of course, behind the curve. It's probably going to be some kind of a serious event if they start to fix dollar China above 7, which is likely not to be for this week unless the dollar gets an absolutely big boost tonight after the FOMC. But I still think we are on our way to small higher levels. It's the only central bank barring Bank of Japan up to now, which is really easing. So where the governments are putting more stimulus in play, and we've seen what it can do to the yen, and the CNH is to a certain extent a bit the same, has the same problematic. Still their COVID zero policy is weighing on the renminbi. So I reckon it continues. Just one quick word on Amamiya. He is considered as being dovish. He's a bit dovish. He was so. If it would be him, we may be in for some surprises on the yen, and the Ministry of Finance will have an even tougher role to contain yen weakness, because Amamiya is quite a dove. He was always in Kuroda's camp up to now. So. Yeah, be a bit careful what you wish for, I'd say, to the people who choose the next Bank of Japan governor. Yeah,
very much so. Just to answer a question there, what is the real mindset of the BOE MPC? In what terms are you asking that? I mean, the Bank of England are obviously in the same hiking path as everyone else. They're probably going to be a bit more attentive to the economic data than maybe the Fed. That's going to play into their mindset more, so that could stay their hand in terms of, you know, whether they jump to big hikes or continue with bigger hikes. The UK isn't looking so rosy at the moment, but we've got all these things coming through Friday, fiscal measures which are mainly domestically led. You know, we've heard of stamp duty going to get cut, inheritance tax. It's all vote winning type stuff, or attempts to win votes, rather than you know, something for investors to get their teeth into. But as far as the Bank of England concerned, they're in a bit of a mess. They're always between a rock and a hard place. One of the few central banks who really have the least amount of control over inflation, because so much of it is imported. So where they are at is where they're at, and we'll see what happens with them next week. But we'll talk about that in more detail next week. So really, the big event is the Fed today. So what I'm going to do is we're going to start off looking at a couple of things. First off, the rate odds for the Fed, just looking at them quickly. The 100 BP hike expectations have come down a touch. We're pretty much running at 25% yesterday, now down to 17. The market is probably well behind a 75 pip hike. As we know from Timmy Leaks, our mate at the WSJ, persuading to as much in his piece yesterday morning. So that's where we're at. That's the baseline we're at, that the Fed hikes 75 pips. But as I've been saying for a couple of weeks now, it's not really the increments that's hugely important. Obviously, if they go 100, it'll be a shock. If they only go 50, that'll be a shock. But the real gold is going to be what they do with the hike path and rates overall. And just to show that as well, I've got the last projections of the dots. Let me just throw that up there. So as I say, these were the last projections. So this shows basically where all the Fed members see interest rates going to stopping, topping, coming back to neutral, that sort of thing. So as you can see, in the longer term, their neutral rate is sitting around that 2.25, 2.5 mark. So they expect rates to go up, contain inflation. Inflation comes down, then they can bring rates back down again. That's where they expect them to sit. This is the longer runs. This is past 2024. Now we are getting the projections today, and they will contain 2025. So that longer run will pretty much become 2025, and then we'll get another section that will say longer run. But anyway, so their path is if you think the top end, that rates get to 4.25%. But a lot of them, you know, really in the 3.75 to 4.25 area. And then in 2023, that's 2023, it gets to there. So for 2022, the year we're in now, only one person thinks it's going to get up to 3.75%. Now, that's likely to be beaten today or the hike after, potentially. So this area for 2022 looks like it could be shifting up. The importance is going to be next year and where they see rates topping out. The market at the moment, there's some in the market who are looking at 4.5%, even up to 5% for where Fed rates top out. So with those expectations in play today, where these dots shift to is going to be very important. This is what's going to drive markets really over what sort of pip increment we get on the rates. Now, I think the Fed are going to have to be shifting these up. I think they're going to be forced to be shifting up. Whether it goes massively, maybe we see the odd dot get up to 4.5, 4.75. I don't know. It's this middle area that we need to watch for. If that tends to shift up maybe to the 4 to 4.5 area, that's going to confirm the market thinking that rates are going to have to go higher, and potentially we're going to get an adjustment in those expectations, and thus call it the curve. These expectations come up, these expectations come up as well. Now, possibly we're seeing that in the bond market already, hence why 10-year yields are still holding up towards highs, because the market is on board with the fact that the Fed are going to have to keep rates higher and potentially for longer. So I believe that's why we're seeing this leg up in yields at the moment. So for me, the trade is the Fed going to change its stance? Whatever it does with rates, 50s, 75s, 100s, is the Fed going to change its long run path? For me, the answer is no. So whatever happens today, if it's a dovish hike, if they only go 75, if they only go 50, and the market sees that as disappointment, that's not going to change what the Fed are doing. If those dots go up, that's going to cement the deal for me. Any dollar weakness I see on that, significant dollar weakness on the Fed announcement, I'm going to be looking to potentially buy into, because I don't see the Fed game changing today. Kay, what's your thoughts on them, mate?
Yeah, I'm pretty much in agreement with you. The interesting thing as well on the plots is, are they going to show us, because if you can bring it up again, have a quick peek at them again. So we're seeing like right now where they are. Imagine that we are getting like a shift higher of all the 2022s, 2023, and perhaps a bit the 2024s as well. How big is the gap going to be in the longer run? Because that is going to be, could be moving the yield curve. Like for instance, if they keep their longer end around the 2.5%, then what we could see is that we have the short end of the yield curve spiking again, because the market always tries to extend whatever the central banks may be doing, and still people are hoping or thinking that in 2023 they are going to start to shift back down towards the end of 2023 and then go lower in 2024. If the dots don't show that, but a bigger gap opens up between the short and the longer end, watch out for the yield curve. And the yield curve is something that if it goes deeper into negative than it is right now, that is something that may weigh on stuff like equities and so be a bit careful on the dots. There's several readings behind there. Personally, I think as you say, they are going to push them up. And yeah, I'm actually of the opinion right here and now that we may have a pause, but we are far away from a pivot. So those 2023 expectations may really the belly of that expectation may really shift to above 4%, which is likely going to underpin the dollar.
Yeah, definitely, mate. Definitely. So, okay, what do we need to do to trade this then? Well, obviously, the first things we need to do is pick our levels. Let's just go into a nice clean chart for the euro. So obviously, we've seen the euro have a little dump off on the Putin stuff. Ooh, funky. So we're back at this 99 level, and for everything that's happened over the past few weeks, this level has been really, really sticky. We've come through Fed meetings, we've come through ECB meetings, we've come through Ukraine-Russian news. For everything that's been thrown at the euro, it cannot get under and hold under this 99 level for any length of time. So you have to ask yourself, can the Fed break that? Well, for the Fed to break that, they've got to be super hawkish, more hawkish than they have been previously. And I think there's limited risk of them doing that because I don't see a reason for them to get hawkish. There will come a time when they will get less hawkish because they can't keep hiking at these rates forever without hitting the economy really hard. At the moment, they're looking through it. They want to get rates up. They want to combat this, but there is going to be a limit. Whether we're approaching that limit, I don't know. Doesn't mean a pivot, as everyone's expects, and this is a problem I have with it with the market. Some in the market, people think there's one way or another. They're either going to be hawkish and hike to the moon, or they're going to be dovish and start cutting rates. Very few see a middle ground where the Fed pause and do nothing for 6 months, maybe even a year. So I think that's where the next stage is. But talking back to the price, if the euro is going to break 99 significantly, it's going to take a lot from the Fed. But if we do get a break in and we do get signs that we're holding under 99, then potentially we're going to get this next leg lower. And that's going to send us down. You know, we're probably talking 96s, 97s, back to this old traffic area in the 2000s. So I've just got a couple of lines on there. I know Kay's got a bit more on his charts, but I just wanted a nice clean look at the levels. This 98.59 line that we've got in here, which comes just below the last low, which was 98.64, actually goes back to 2000 and 2002. So you can just let's see if I can zoom in a bit. So it's an old support and resistance area that you can see in there, and it goes back a bit further too as well. You have to do a little bit of chart switching to actually see that in more detail. So that's why that level is in play there. And obviously, as we come down, we have some other levels there down into the 90s, 97s, high 96s, and then down to 96, just on this prior price action here. That's where we'll be looking at if we do cement a break under 99. Now, what about the upside? Well, really, it's going back to our old well-worn ranges, unfortunately. You know, here we are messing around in parity still, can't get up towards the let's go out a bit further. All this chart shifting. So it's still the range between 99 and this 103, 40, 60 area. That's our main numbers. If they're going to pivot, if they're going to be dovish, you know, we're going to expect to move up towards this area. Can it get up that far? I don't think so, because the weight around the neck of the euro still remains. This stuff with Putin going on. There's a strong reminder of how much weight there is weighing on the euro at the moment. So any sort of big rally we get here is likely to be hit, whether that's up towards parity, whether it's up to a bit higher to this zone, or even up to the 102s. I think it's going to be a struggle to get up there if we see the Fed not being as hawkish as they have been. What do you make of the euro, mate? Have we gone back to rally sell now? It was looking at more of a dip buy for the last couple of weeks.
Yeah, for me, yes. For me, it's still a sell and rally. Still a lot of weight around its around its neck. And now with the Russia-Ukraine situation, we've seen Brent and European gas prices going back up. Without Fed meeting, without taking central banks into account, I'm really thinking there's still too much weight around the euro just to put in a sustainable rally. We have seen those relief or correction position related rallies on the euro. We have seen lately some sessions of euro cross buying, which we mentioned as well, where the euro yields were rising actually faster than the euro dollar, so keeping the euro dollar than the dollar ones. Keeping the euro dollar in a range with some relief rallies there. The euro crosses went up a couple of legs in each, but then now we are back to the Russian situation or the Ukrainian situation, and as a matter of fact, this morning the European yields have come off. Well, I mean the differentials have widened a little bit again. Yes, for as long as we're staying below that yellow line that you're showing there, around what is it, 101.5 now, or somewhere around there.
Yeah, give or take.
And if we have even like a closer or a tighter look at those levels, it could we could find the 10080 figure in there as well. So as long as we are staying below there. I don't see how euro can rally sustainably. The day we are starting to move, and I think 102 is already enough now. Of course, we've got the 103.5 in there, which you talked about. But I think this prior high there around the 102 zone, we are seeing this around the 15th of October. We are seeing this around the 10th, 12th of September. If we start to get above there, then it may be different, and then we'll have to something may have changed. Let's put it that way. May have changed.
Yeah.
And then we're going to have to pay attention. But for those who trade it more medium term, it's I think there's very little doubt that this thing is still firmly negative right here and now.
Yeah. So back to trading this on the Fed. It's looking like it's going to be a rally sell. We've been discussing what do you do if it breaks. You're going to need to look for that confirmation of a break of 99. You know, if we do get a break, you know, a knee-jerk break lower, you manage to catch it, you know, fine, great, run it for all it's worth. But I'll be very, very hesitant if it spikes below and then turns back above pretty quickly. If that's the case, then we're likely to find this a bottom once again. So if we go below, but if we come up, test it, and we hold below 99, that might give us some conviction to think we're getting a proper break. And you don't have to be, you don't have to throw buckets of pips at it. You know, if you manage to grab a short, you know, 98.80, that sort of thing on a break, and it confirms, you know, 99, 20, 30, you're wrong. And so you don't need that big a stop on it or something like that. Dollar yen is another one to look at. Still, give or take, sitting pretty much in the middle of the range, maybe towards the top end. I'm still short this one from a week or so ago when we had that last test at 145. Again, it's going to be about the confirmation. If the Fed are super hawkish and we break 145, can we hold on to it? If we can't, we're potentially going to stay in range. Conversely, on the other side, if they're not as hawkish as the market expects, they become a bit unhawkish, let's call it that, we could well get a test down to the lows down at the 141.5s. But also we've got the Bank of Japan double whammy. So be careful with dollar yen getting sucked into a particular move on the Fed, depending on which way it's going to go, because obviously the market might go into pause as it waits for the Bank of Japan. After that, then it makes its subsequent move on the Fed, if you like. So we know the chances are that the Bank of Japan obviously are not going to change policy at all. That's the large expectations. So the risk is that we get a language change. And if the language change is in any which way less dovish, then we're going to see yen gain and likely this fall. So it's a bit of two-way risk here for trading yen pairs in general, but particularly dollar yen with the Fed and then the Bank of Japan. So look at what the Fed does, make a judgment there, then match it off against the Bank of Japan, because it could mean we break either side of that range after we've had the Bank of Japan. Kay, I know you look at the crosses more. If you want to take the dollar out the equation altogether when trading tonight, do you want to have a little quick look at the crosses?
Yeah, sure, mate. Let me share my screen a little. Where am I?
Where have I gone? We just missed your first part of that comment there, mate.
No, okay. No, I didn't say anything specific. I'm just going to. Do you hear me now?
Yeah, gotcha. And got your screens now.
Right. Okay. Yeah, let's look at a few yen crosses, and I think the first one, and I've shown it here before, is euro yen. We had a test and a break below this 142, call it 35.60 zone. I think this could be important after the Bank of Japan. Even on the day, it's already a pretty important level. But after the Bank of Japan, because if we take into account what's happening again in Russia, Ukraine, which should, in theory, continue to weigh on the euro, if we take into account the FOMC, if ever we'd get any negative surprise there, that would put pressure on the dollar yen. And if you then get a Bank of Japan, which for whatever reason, or well, with good reasons right here and now, would start to go a little bit more undovish, I think the combination of those three things could really be a factor here to send euro yen down the drain. It could be. That's just what I'm saying. And I'm not trading it before I know anything about the Bank of Japan, because the Bank of Japan has the power to send it around 200-300 pips. If it's to the top side, they will be crying and shouting again. By the way, there was this article out with comments, and let me just see where it is, with comments about the interventions and exactly what I've been saying, that when they were checking rates, which was the last step before they can actually, or they will actually intervene if needed. So an ex FX chief in Japan confirmed exactly that. Yamazaki said that interventions can now happen anytime, because the fact that they checked rates, which is exactly how I said, the last step before actual interventions if needed. So then back to the euro yen, I think the triptych of Russia, Ukraine, Fed and Bank of Japan has the power to really make this move, and we need a couple of conditions to be met, under which probably the most important right now is the Bank of Japan in this whole thing. But there is a potential that this has seen the top and starts to reverse. If the Bank of Japan continues on its path and guides or lets the yen somewhere weaken further and tell the MOF it's their problem, I'm going to stay away from this cross. Just stay away from it, because anything that will happen on the Bank of Japan, first of all, if we keep in a negative, let's say if they keep their dovish path, and again, I'm thinking that there is a real chance of them to start to change some stuff. But if they keep it negative, then we're looking at a move in dollar yen, which could take us. I mean, we have to go longer term. This one, which could easily take us up to levels around this 147.80, which is the 1998 high. And right after we hit that high, Mr. Yen at the time, Sakakibara, who was head of the MOF, decided that it was enough, because he was always advocating for 125 to 145 range. And we had this sharp rise in there. That was the last intervention, really, where the Bank of Japan started, was selling dollar yen, and in fact buying yen. If Bank of Japan goes all mellow, we could be in for a test of these levels again. So that is one thing. If we start to let's assume for a minute that we are getting some form of comments where it would be exceptional because the Bank of Japan does not have the mandate to guide the yen. Okay, the currency is MOF's territory. But if for whatever reason, as Kuroda and friends decide to start to surprise us again on that side, so the closest one to watch here for me is around this 143.10. Then we have another one where we stopped the last time at 142.60. If we start to break below this 141.5, 141.35, then something is changing in my opinion. So this to me is a zone, is a red alert zone to me personally around 141.5. Just to keep that in mind. Top side 145, as Ryan has already said. Moving on. There's a couple of interesting ones, and if you look at the yen, we've had this Canada yen move higher, and it went really close, probably close enough to the target of this bullish flag in Canada yen, and then started to reverse for several reasons, under which oil coming off, perhaps a little less stress, and we've also seen that Canadian yields, for some reason, have not enjoyed the same rally as yields elsewhere have done. So as a result of that, dollar Canada has been shooting higher as well. So this thing has been coming off, and I was mentioning in the room this 108.25.35. We went for a retest, capped, and then we are back lower. This thing could be an interesting one as well after the Bank of Japan, especially in the light of the events that we are seeing now again on Russia, Ukraine, and especially I think the market is now looking for this move lower here, down towards 105.5. But if the Bank of Japan would go, it wouldn't change anything at all. Watch out for this 108.25.35 because it's going to disappoint the bears, in my opinion, and we could really very fast go back up there. Now, I need to repeat here, with everything I say and with everything that we're looking at the charts, be ultra careful on the Bank of Japan, because it could be that the Bank of Japan stays pat, sends the dollar yen 200 or 300 points higher as a reaction to it, and then the MOF steps in and slaps it down. So to me, there's a potential of big saloon doors coming night. So be careful with whatever you trade in yen. Be protected with stops, or keep it very light, and even don't forget to take profits, especially if we're going higher, because any move, substantial move higher in yen pairs is really heightening the risk on interventions today. Let's look at a couple of other things. Aussie and Kiwi are both under the Kush, and my charts are a little bit. I'd rather look at Kiwi and separately. So obviously all the yen crosses will move. So I let you decide. Sterling yen is another one. Just perhaps this one, because it's coming back. I had drawn this line here, and we're trading around. We jumped a little bit back up now, but we went to test this 162.38 zone, which is also a shorter term trend line coming in there on my picture. So have a close look at sterling yen after all the events, I would say. So you can even take that as a guide as well for when we will get Bank of England tomorrow. Quick look at the rest. As you know, we've had this level here, 59 the figure, 58 85, the trend line. Kiwi is testing the levels, but ahead of the FOMC, it seems that we are going to roughly hold that one. Keep an eye on that one for post FOMC. I would say if ever it breaks, there is really not a lot in the Kiwi. I think some people have in our room have targets around 57-ish, 56.5 if I recall well, but there's a bit of a gaping hole here if we ever get a close under that 59 tonight. I want to keep an eye as usual on Noki and because that's been a mover lately as well. The Russia situation, Russia-Ukraine situation made it that yesterday we put in a top around 1032 on the Euro Noki and we're shying away from it. So I reckon this is now again a level to watch. And contrary to dollar Noki, which is still behaving quite big, although we are 6 big figures of the highs there as well. Keep an eye on this one because, as we know, Norway is a provider of gas and oil to Europe. If the tensions get confirmed or accentuate or heighten again, this could put in a top. So there may be a case for this to come off back to sub 1020, in my opinion. Dollar Norway tried to break just shy of the 50% retracement here of the big, no, sorry, it's a longer one. It's the 2018-2020 rally, the here 38.2 coming in at 1042. We went up there briefly, but then due to the weight of the Euro Noki, we shied away from it. So keep an eye on this 1042. Other side of the spectrum, I'm not going to do much in this because there's opposite pulling forces, in my opinion, between what's happening in Euro Noki and what's happening on the dollar. But anyway, if we get anywhere, move back down to 1017, 1018, and more specifically 1012, 1014, I may get interested again in this one. CNH, it's going. Huh? It is going. It's undeniably going. Since we had a retest there of the low 690s, it's just going. PBOC, Chinese government keeping the CNH under pressure. Unless FOMC goes all bananas and goes all dovish, I can't see this thing trade far below 697. If we even get there, it might just be hanging around this 6700 if we get a retracement and then have a move higher. I think Ryan showed on the or told us at least that there's a big dollar CNH expiry today around this level. It's an interesting level, but it's nearly 1% away. I'm not even sure if we get there, to be honest. But anyway, I'll be looking to try something in this zone again, 697, 700. I'm still having my base position in there. And wow, Euromex is not really a lot to say. This morning it was I got a bit trigger happy on this one, I must admit, and I thought, okay, Russia, Ukraine, it's going to be a risk-off situation, and I covered it around here. I was looking at this low, and I said, like, yeah, maybe it's wise to cover it. And then, of course, Mex got his, I call it far from my bed, safe haven back, and Euromex is just trading lower. So I think I'll be looking to any retracements to get back in. And Ryan, have I missed any questions?
No, I don't think so, mate. Just having a look through, just trying to get some communication out to viewers, what they're looking at over the Fed, what they're looking to trade, their ideas for the Fed. They're going to be hawkish, non-hawkish. Is it going to be 75? Is it going to be 100? Come on, guys, let's get some conversation going from you folks there.
What do you think? 75 and no change elsewhere, and then over to the dot plots to keep it simple.
Yeah, Yeah. You got any thoughts on the S&B tomorrow morning? They're expected to hike 75.
People are even expecting, saying that they could go 100. I think they will do 75, take them well out of negative territory.
Yeah, plus 50 pips. They are. People shouldn't remember that they are quarterly, the central bank meetings. So could we see a bit of front loading and they go 100?
Yeah, I mean that's the reason why people are expecting them to go 100. I'm not sure, looking at the effect that they had on the Swiss franc on the last comments, that they will go 100. But of course, since it's a quarterly meeting, they could do it because they said that Swiss was not that overvalued anymore lately, and it sent Euro Swiss nearly 10% lower. So well, we are roughly 10% lower than when we were when they came out with the green light to let Swiss strengthen a bit versus Euro anyway. Yeah, I mean, it's 75 is probably baked in. 100 is the odd one out. Down to where will they let Euro Swiss go? I think for the time being, they see the lost battle that they are fighting if they would go on the bid in Euro Swiss. I can imagine if they would go and sit on the bid in Euro Swiss now, that people will see it as a green light to sell even more euros. So I think they're clever enough to maybe not go and sit on the bid, but wait until something happens on their decision, and then perhaps come in for a little bit, because I would doubt if they would be really happy if the Swiss is strengthening on its own. They are at the other side of the spectrum now of the Japanese yen, because even dollar Swiss with euro dollar hanging on its lows, dollar Swiss is still well below parity. So yeah, I mean it's a little bit. If the Swiss strengthens really markedly after the S&B, I may give it a try on a counter trade, but that's musical.
Yeah, definitely.
And with that, back over to you.
Yeah, go ahead, mate. Yeah, I'll grab them back. And I was just looking at the Swissy there while we were talking about it. Depending on where your peg pull low comes in, which some people have it all the way as far down as 85s, I think. We are below the cap pull when they pulled the rug out from everyone. So pretty much uncharted territory for this currency. Where can it go? Who knows? The reason I've got my trend lines not on these lows is because, as I mentioned, it's hard to define where those lows exactly are. So what I tend to do is take the immediate price action after those moves as more of a indication of where the market settled or where it was a bit more liquidity coming in. So that's why it's not on the bottom of those lows, because we don't know if those lows are real or not. Yeah, I just want to touch on Euro Sterling. And a couple of you are trying to jump into longs or get into a trade. I've been looking at that myself for a test of that 87 area. You could say we got down there to the low 20s. If you want to split hairs, it's probably 86.90, 87, 15, 20 is the area. So it's still coming down, testing, and we're still bouncing. So I'm going to call that for now a hold. It's giving more support to the level. The more times we test this level and it holds, then obviously we start maybe thinking that a break back under is potentially brewing, because we don't like a level getting tested too often. Conversely, we need to see the upside taken out. It's going to be in this 83.80, 90 area, which is obviously going to be protection of that 88 zone above. So potential range setting up between the big figures here, and it probably means we're going to have to go with a break either side of that. Just looking at some of the other things, and I won't take your time too long because I know we've been prattling on. Gold, obviously the risk off move is leading to some buying in gold. So we're looking at this 75.80s area once again, bit of a zone. Obviously the prior lows, long-term support area. It's not getting above. I'm still a little bit short in this one. I want to see it really get below that 60 area and for it to continue lower. I think that's what it's going to take to crack this one. But otherwise, let's see if you've got any other questions here. Brand and his DXY. You love your DXY, mate. Dollar CAD. This one's really off to the races.
Brian,
you know, well out the old long-term zone, well above the 50 fib now, well above the channel, finding support on this channel break. Technically looking very significant there. Where can it go from here? Really, potentially the sky's the limit. Now we're over the 50 fib. There really is the line in the sand. Let's go on to a weekly, see what that can tell us. So we're really getting into some potential clear sky there. You know, get above these highs, you know, 34s, low 134s. We're really possibly on for a move up to this 61.8 fib. Big levels going. Potentially going to take a lot to change that around. Expect the Bank of Canada to maybe keep in lockstep with the Fed. So the policy divergence side of things there is going to remain as it is, the ratio, if you like, unless they start slowing down as well. But they seem intent on continuing going. Obviously, got to keep an eye on oil as well. What's happening there? Still not looking too hot in oil markets. Obviously going to be another negative for the CAD there. So anyway, just final thoughts on the Fed. Do your homework. This is what this time between now and the FOMC is all about. Go over your charts, pick your levels, think about the levels that you're potentially willing to trade. You may have 10 levels. Pick the strongest ones, rate them, rank them. Are they close? Are they not close? Are they within a decent stretch range of any moves? You've got to be looking perhaps, you know, 50, 80, 100, 150 pips is usually a ballpark figure of where ranges might go on central bank moves, those sort of numbers, unless there's some really big news. So I tend to look at the stretch points. Where is the price going to run into trouble? Where is it going against the narrative of the central bank? So do your homework, pick your levels, know where your risk can be set against these levels. And if you're trading the Fed, stay safe. If you're not sure what to do, sit out, watch it, grab a bag of popcorn, grab a coffee, listen to Powell, pick up the pieces after. There's no need to go risking stuff on a guess of what you think the Fed may do. So apart from that, as I say, trade safe. I wish you many pips tonight if you're trading it. Thank you very much for coming to the Flow Show. As always, thanks to Kay for his wise input as usual. Have a great day. See you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.